Hello and welcome to another update video about silver. Yeah, silver made a new low. Correction wasn't over yet. Yeah, something that I warned about could happen already in the last few videos, given that silver showed quite a lot of strength on the move down. But we're going to zoom in a minute, take a look at what that means and what the next levels are that we would expect based on our Elliott wave analysis. So it remains here the view that we created here, a wave 1. That is just a long-term view in 2011. We then came down in a wave 2 correction. We are now, in my opinion, in a wave 3 to the upside, but within this wave 3, okay, you always have subwaves. So in this wave 3, you can see we completed, in my opinion, a wave 1 back in August 2020, and we are now in this wave 2, after which we should see a wave 3. Yeah, so the wave 2 isn't over yet. Silver has proven that to us. There was a potential there. Market didn't use it, so we have to focus again on lower. You can also see how relevant that area was here. As we broke out of it to the downside, we accelerated the whole downtrend. So there was a chance here to reverse, but the market didn't use it. So that means we have to change the wave count based on the latest developments here. And no problem, we can do that. So I'm going to do that here with you. We first start with a higher level perspective. So if we say, all right, this was a wave 1 here, then down there we'll have the wave 2. And here in dark green, you've got the key target area anyway, in which I would expect the silver price to land. Target here is, and I'm just thinking, no, target here starts at $17.50 and it goes all the way down, ideally not lower than $15.60. However, if we draw the Fibonacci levels, I might want to extend that further to the downside. Yeah, so it ends here at the 78.6% Fib level. I will now, because it is absolutely possible and due to the strength of that sell-off, to extend that further down. So I'm going to extend it down to the 88.7% Fib level. Somewhere here, we would expect this wave 2 to end. Anywhere now basically between $17.50 and $13.65. We would expect this whole correction to end. Now, we are going to specify that a little bit further in detail, but let's first look at the wave count that we have to deal with now. So overall, I see this correction now due to this latest move down as a WXY correction. So we had a wave W here, a wave X here, yeah, and then we came down in a wave Y, and this is sort of where we currently are, in a wave Y of a wave 2. Let me make that a bit smaller maybe here. I don't actually know if I can do that. Thought I could. Don't worry, try that later. So WXY. So in this Y wave then, and this is the next level of detail, I go from the weekly chart now to the daily chart. First of all, what I'm going to do, let me just take out here these, because obviously while we hit here various reversal and target areas, that's all fine, but the market obviously didn't use that chance, and because we've now made a lower low against that one, yeah, we have to focus again on the downside. This is why I often say the market shows us a potential. So the market started to move up from here impulsively. This was certainly a potential for an impulse. As you know, we didn't unfortunately reach my target area up there. We missed it by a few dollars. That already was a sign of weakness. And if you've been watching these videos, you will remember that. However, it was still considered a 5-wave move. But I always tell you that we then need to wait the move down, if that will be a 3-wave move, and will it end in this reversal area. If it doesn't, then it is very likely that we haven't got the 5 waves up and the 3 waves down. Yeah, it's more than correction up and then impulse down. So therefore, the best way always, and I repeat that all the time, to use the Elliott waves as well to understand if a low is in. You want to wait for 5 waves, and you want to wait for the 3 waves down. That is the best confirmation, and then possibly even see a small impulse to the upside already emerging from there. That's the best confirmation you get, making a higher low in 3 waves after a 5-wave move to the upside. And you get your target area specified, and if you stop in there and reverse and maybe even exit, that's the best confirmation, the best balance between confirmation but also getting the lowest possible price, which doesn't mean you couldn't trade the wave 3, yeah, but it's just less confirmation and it's more risky. So it's just a balance of what an individual trader or investor would like to go with. Okay, so in this wave Y then, how can we label this now from an Elliott wave point of view? So in my opinion, what we have to deal with here is quite a rare correction. It's a so-called, in my opinion, quite an extensive one now. So I would go with a WXYXZ correction. They are quite rare, but for now I would go with WX. This was then the Y wave, then here another X, and now the last wave down in a wave Z of wave Y here. And I make that another color though. Okay. So this means what interests us now is, of course, so basically each of these waves has 3 subwaves. So that's how you can count it. What interests us now, how low can this wave actually go, right? The wave Z. This is where we would go with now, and we can take a look at that in a little bit more detail now. So what are the key targets for a wave Z? So we can, for example, take the length of the wave W. That is one way of calculating a target for a wave Z. And we say we add it to the beginning of the wave Z, and then we get a target. So one target is the 61.8% level. That is at $16.86. And the next level would be 1438. That's the 1-to-1 ratio between waves W and Z. That's certainly something to keep an eye on, yeah? Certainly something to keep an eye on, and that's how we could go with it now, yeah? And these are the 2 key levels. Not the only ones. This is a fairly large area, but these are 2 key levels I would keep an eye on, yeah? So, and for now, we could expect still lower prices based on this. Certainly I would want to go into 1750 to touch that level at least, but anywhere in this area. Yeah, anywhere in this area we can expect the reversal. I just gave you 2 key areas in this level based on Fibonacci extensions, but we can also go with the retracement levels of the wave 1. So here obviously, just double check that. Yeah, so here obviously in there you've got the 78.6% Fib level at $15.52. So we can also highlight that, or 56 plus minus a few cents, so 52. So here basically levels 1682, 1556 and 1436 in this area, yeah, plus minus a few cents. That's not really, you know, prices are too dynamic, but keep an eye on these levels, I would say, in this move down. That's how it currently looks like for me. And yeah, so that's how I would go with at the moment. Okay, and that's how I would, that's how I see the silver price now. So it has another chance to reverse in the dark green area. If it really drops below that, it would not be good for silver, absolutely not, and we risk maybe even a single-digit silver price. But this is for me the next most likely area of reversal where we can expect the price to reverse and get back into a rally to the upside, but possibly throughout September, which is historically a rather weak month anyway, we will see some more sideways or downside movement. Thank you very much, and I hope I'll see you in the next video. Bye bye.